Hi, it's Mitch from Reverse Mortgage Pros. In this video, I'm going to answer the question, is a reverse mortgage a ripoff? Let's get started. Now, if you're new to my channel, I offer free professional help with your reverse mortgage decision. To get videos like this and other information and key tips on reverse mortgages, hit the subscribe button below this video or the thumbs up like button to get more of my content. Now, some people out there believe that reverse mortgage is nothing but a ripoff, and you may have heard this yourself or had someone tell you this. So in this video, I'm going to address this concern, look at some real life numbers, and go through all the costs, fees, interest, and everything that comes along with a reverse mortgage to see if any parts of it qualify as something you might call a ripoff. Now, before I do that, as I do at the start of every video, I'm going to outline what is a reverse mortgage in 20 seconds. It's a mortgage for homeowners 55 and over that doesn't require any repayments. You can get 10 to 55% of your home value depending on your age, property type, and location. You can take as much money as you qualify for, the 10 to 55%, but any existing mortgage must be paid off first. And it's designed to help you tap into your home equity for retirement and to continue to live in your home. Now, as I mentioned in this video, I'm going to answer the question and give you the information and facts so you can decide for yourself if a reverse mortgage is indeed a ripoff. So let's start by looking at the definition of ripoff. If you Google it, have a look online, read in any kind of dictionaries, it generally refers to something that is overpriced or poor value. So if somebody offered you a sandwich for $50, that would be a ripoff. It's overpriced and not worth the value. And it's also something that's not worth the money paid for it. So the same thing, a sandwich is worth $50. So that would be something that would be defined as a ripoff if someone was trying to sell you a sandwich for $50. So where does the ripoff concern come from? Well, for something to be a ripoff, as I just discussed, it has to be overpriced or not worth what you paid for it. Now, when it comes to reverse mortgage, there are two aspects you pay and kind of two costs buckets you can kind of think about. The cost and fees to set it up, that's the first one, and the interest rate, that's the second one. You pay over time, even though you're not actually paying the money, it accumulates the balance over time. So I'm going to examine both of these and see if they could be called a ripoff, if there are any parts of them that are maybe a little bit too expensive, it might be called a ripoff. So let's start with the costs and fees of reverse mortgage. Now I have a whole article that discusses these in detail. I'll link to it below this video, but the cost and fees for a reverse mortgage generally include the appraisal, the legal closing of the mortgage, any lender fees or lender admin fees, and independent legal advice. So I'm going to examine these and see if there's anything that we can find that could be deemed a ripoff in the costs and fees here, starting in order with the first one, the appraisal. Now, appraisal is done on almost any home in Canada taking out a new mortgage with a new lender, not just a reverse mortgage. It's fairly common industry-wide. The cost varies, but it can be around 300 to 600 in most instances, and possibly a little bit more if you're in a more rural location or you have a more expensive home. Now, this is certainly quite pricey, but without appraisals, there's no way for a lender to accurately value a home for a mortgage. So it is a necessity in getting a mortgage. I can't really say that this is a ripoff because there's no other way of establishing a home's value in the mortgage industry other than doing an appraisal. It's a necessity in the world of mortgages. So I'm not really going to call that a ripoff. Let's look at the legal closing of the mortgage, the next cost. This is the cost to legally register your mortgage on your property, and it includes title insurance. So it's usually around $1,000 to maybe $1,700, and it's not paid upfront. That is, you don't pay it out of your pocket, but it's taken from the amount you borrow and added to the reverse mortgage. Now, this is expensive, but a title issue alone could cost you thousands of dollars, if not you losing your entire home. So hundreds of thousands of dollars. And this legal closing cost is almost worth the money just for this. And the way I would put it is Canadians spend thousands of dollars every year. You might spend 20, 30, 40, 50, $100,000 on home insurance over the course of the life that you own a home. And when you think about that, just for the title insurance alone, it's actually quite cheap and certainly not a ripoff. And once again, it's also required on every new mortgage in Canada. The lender has to register the mortgage against your home. That's how all mortgages work in Canada and everywhere in the world. So it's another kind of necessity. So I can't really say that this is a rip-off. It's something that you pay for, again, with every single mortgage, anything you do with your home, and just the title insurance alone for dealing with the mortgage here is probably worth it when you think about the cost of home insurance. Next up is the lender fees or lender admin fees, and these are fees charged by the lenders for processing your reverse mortgage application. They range from around 995 to 2,995, can sometimes be a little bit more. Sometimes they include the legal closing costs and sometimes they don't. And they can also sometimes be zero or reduced if the lender is running a promotion. Now, these are certainly quite expensive and could qualify as something that you might consider a ripoff. Looking into more detail on lender fees, they aren't charged on a regular A-level mortgage at setup. They are when you move the mortgage away from a lender. Usually, the lender will charge a fee then, but they're not charged when you set up. So if you go to Scotiabank, RBC, TD, any of the banks, and you try to arrange a mortgage, they're generally not going to charge you a fee. Now, if you were getting what's called a B mortgage, so that's a mortgage from, say, a private lender or not a big bank or something that you have to do because maybe you don't have the income or credit to support an A-level mortgage, or you're getting some, say, a second mortgage behind one of the big banks with a private lender or anybody really that's lending a mortgage. There generally almost always are fees charged for this, and they can range from 1% of the entire balance of the mortgage, from $1,000 to $10,000, even sometimes higher. The fees can get pretty big when you enter the world of non-A-level big bank lending. So the lender fees for a reverse mortgage are certainly expensive when you compare them to a regular mortgage, which are basically free. There's no lender fees, but actually quite cheap when you compare them to B mortgages, private mortgages, second mortgages, and other mortgage options out there. But you can definitely make the argument, and there's a case that these fees are a little bit of a ripoff when it comes to reverse mortgages. The fourth and final fee and cost you pay for a reverse mortgage is for the independent legal advice, or ILA for short, that is required on every reverse mortgage. The cost ranges but tends to be about $700 to $1,000 and it's deducted from the proceeds. Again, like the other three costs, other than the appraisal, you don't pay this upfront, and even sometimes you don't even pay the appraisal upfront. So when you pay these costs varies. Again, watch my article and video on costs and fees to get more information on that. Now, independent legal advice is now basically a legal regulatory requirement in most provinces in Canada. That means that a lender cannot issue a reverse mortgage if you don't get independent legal advice. The independent legal advice is your chance to review the reverse mortgage and contract with a lawyer. So it is an important stage in the process. And given that it's required by law, you can't really say you're being ripped off and having to do this because the lender couldn't even let you get away with this if they wanted to. It's a legal requirement. So when something's a legal requirement, it's pretty hard to say it's a rip-off. I mean, you could certainly argue that, but that's an argument you'd pick up with the government rather than the lender themselves. So that's it when it comes to the costs and fees of setting up the reverse mortgage. Then you've also got the interest rate that's going to be charged for your reverse mortgage. And again, I have a whole article on video interest rates. I just released one called "Are Reverse Mortgage Interest Rates Really That High?" If you search on YouTube for Reverse Mortgage Pros, "Are Reverse Mortgage Interest Rates Really That High?" You can watch that one after this one. I'll also link to it below. And of course, you don't actually pay the interest on a reverse mortgage. It accumulates over time and is paid when you pass away, but it's still an important cost to think about because it's still going to be charged eventually in the end. Now, in deciding if interest rates are a rip-off, if they're overpriced or not worth the money, remembering our definition of rip-off, the easiest way to do this would be compare the interest rate of a reverse mortgage to other products. Now, again, this is a slide I've taken from my video on my article on reverse mortgage interest rates, so you should definitely watch that as well to get more information. But here are the different ways to borrow money in Canada and their rates. So to decide if something is a rip-off, you have to compare it to the other products and options out there. Now, credit cards, bank overdraft, personal loan, line of credit are all double-digit interest rates, as are probably second mortgages and most private B-level mortgages right now. Car loans and a home equity line of credit tend to be very similar in rates to a reverse mortgage. Sometimes a reverse mortgage is actually lower than a home equity line of credit and a car loan. Sometimes it's actually higher, and sometimes it's pretty close to be around the same. Generally, they're in that range. And then you've got the top kind of A-level mortgages that I talked about before, which are if you have a really good income and a really good credit score and you're going to a big bank, a big lender, or a specialist mortgage lender. That's how you get those are the best rate lending products you can get in Canada. So it's pretty hard to say that reverse mortgage rates are a ripoff when they're around the third lowest product out of dozens available for you to borrow money in Canada. And really, sometimes it can be the second best lowest rate. So again, it's hard to call that a ripoff, but I remember when we looked at definition ripoff, it's not just if it's overpriced, but is it fair in terms of what you're getting? So you can't really compare a reverse mortgage to some of the other products listed there because they're not the same thing. It's not the same thing as a car loan. So what I would say is that most folks who are over 55 and they're looking at a reverse mortgage don't have strong income or a good credit score or both. Generally speaking, you're retired and your income has dropped considerably, or you might have a poor credit score for various reasons. Doesn't really matter. One of the two usually applies. And when you take out a regular mortgage or any of the other loans I just listed, you will need to have strong income and a good credit score. So really what we should do is compare a reverse mortgage to only products available to someone who has very little income and or an average credit score. So when you do that, these are products that you can get with very little income and average or okay credit scores. Reverse mortgage is actually the best rate available for any product in Canada. It's, again, as I mentioned, car loans can be higher or lower, and it's pretty close. Generally speaking, reverse mortgages are lower interest rate than car loans. And even then, car loans, you do still have to have some kind of supporting income, so it's not quite a fair comparison. But you can't get things like an A-level top mortgage rate if you don't have good income and a strong credit score. So you can't really compare a reverse mortgage to those. So again, it's hard to call a reverse mortgage a ripoff when it's the lowest possible rate you can borrow money, generally speaking, when you're over 55 and you don't have very little income and you're retired. But let's keep this going, keep analyzing the equity and the interest, and what about what you're giving up and what the lender's getting and what you're getting, which is you're going to give up some of your home equity because you're not going to make payments toward this, you're going to make payments in the future through your home equity. And many folks believe this is where the ripoff comes from, that you're giving up too much of your home equity, that the lender's going to take your home, all this kind of stuff that you hear. So let's have a look at that and see if that's where the ripoff is with a reverse mortgage. And to do that, I'm going to look at some example calculations and walk you through numbers. I'll try and not get too deep into the weeds here, but I can keep it as simple as possible. But let's look at an example calculation where you own a home worth $500,000 and you're taking out a reverse mortgage for $100,000. That's 20% of the home's value. For the purposes of this example, we're going to assume your home will grow in value at 4% and the reverse mortgage interest rate is 6.5%. Now, 6.5% is probably at the higher end of the long-term interest rate you'll pay in a reverse mortgage. It's right about where the rates are now as I make this video, but they have been lower than that and they have been a little bit higher than that. I think long-term 6 to 6.5% is where reverse mortgage rates will even out to. So let's use the top end of that so that we're being conservative for our example. Now, with all this said, what would your equity look like over time, and when will you lose all the equity in your home? So in this example, after taking out the reverse mortgage, you have $400,000 in equity, the $500,000 home value minus $100,000 that you took out as reverse mortgage. It will take around 68 years before the reverse mortgage would equal the home equity under this situation. And here's what your home equity looks like over time. So after 5 years, your home equity has increased by 70,637. After 10 years, your home equity is 550,000, which is an increase of over 150,000. And after 15 years, your home equity is 736,000, which is an increase of 336,000. It takes many, many years before your home equity starts to decrease in this situation because your home is growing in value faster than the reverse mortgage balances for a long time until 68 years have passed. Now, let's take a look at another example, which is exactly the same, except now you're taking out double the amount of money. You're taking out a $200,000 reverse mortgage or 40% of your home's value. And what does your equity look like over time? When will you lose all the equity in your home? In this situation, after taking out a reverse mortgage, you have $300,000 in equity, which is your home value of 500,000 minus your reverse mortgage of 200,000. It will take 38 years before the reverse mortgage would catch up and equal the home equity under this situation. And here's what your home equity looks like over time. After 5 years, it has increased by $32,000. After 10 years, it has increased by $60,000. And after 15 years, it has increased by $76,000. Again, in this situation, it takes many, many years before your home equity actually starts to come down and eventually for the reverse mortgage balance to catch up with how much your home is worth. Now let's look at the most extreme example. It's exactly the same as both examples, except now you're taking out the maximum amount for reverse mortgage, $275,000 or 55% of your home's value. Now, as I mentioned, this is the maximum reverse mortgage you can get in Canada, and you generally need to be over 80 and living in a big town or city to get it. Sometimes you can get it under 80, really over 80, and sometimes over 85, really, to get the full 55%. Now, what does your equity look like over time, and when will you lose all equity in your home in this situation? So after taking a reverse mortgage, you have $225,000 in home equity, which is your $500,000 home value minus the $275,000 reverse mortgage. It would take 25 years before the reverse mortgage would equal the home equity under this situation. And here's what your home equity looks like over time. After 5 years, it has increased by 4,000. After 10 years, it started to decrease. It's decreased by 6,000, and after 15 years, it has decreased by 42,000, but you still have $182,000 in home equity. Again, it takes many, many years, even taking the maximum possible amount, before the reverse mortgage balance catches up to how much your home is worth. So let's put the rates and the interest rates in context. For all three examples, to get to the situation where you have almost zero home equity, you'd have to live almost longer than any human ever has in history. You'd have to live to well over 105, 110, 120, 130 years old in all three examples. In all three examples, after 5 years, your home equity has increased. And this is important because with most lenders, after 5 years, you could exit the reverse mortgage and sell your home and not pay a penalty, and you're still increasing your home equity. And it's only where you take the full 55%, which you have to be around 80 to 85 years old, do you actually start to see a decrease in equity after 10 or 15 years. If you're not taking the full 55%, in most situations, even up to 40%, your equity has increased after 15 years. This is also using, as I mentioned, a relatively higher interest rate. As I believe reverse mortgage interest rates are going to be in the 6 to 6.5% range. If you use just 6%, then all these numbers start to look a lot better even. And finally, this is assuming that you take the full amount up front, which isn't always necessary. If you qualify for 55%, you don't necessarily have to take the full 55% up front. So those are the real numbers. You can judge for yourself and decide for yourself if you believe that that is a ripoff and that you're giving up too much home equity or that your home equity is going to run out over time. Now, in summary, in this video, I examined all the costs of a reverse mortgage to determine if they are a ripoff. Most of the initial costs and fees can't really be called a ripoff other than the lender fee, where you could make an argument that that's a little bit of a ripoff. The interest rate charged is the lowest possible you can borrow money with when you have very little income or a poor credit score. That is, if you're retired and you're not working and have regular income coming in, this is probably the lowest interest rate you can borrow money at in Canada. Finally, as I just showed and walked through several examples, in order for a reverse mortgage to eat up your home equity, you'd have to live until well over 105 years old, and sometimes even 110, 120, and you're now becoming the longest living human in history in order for the reverse mortgage to eat up your home equity. So you can review this video, review everything I said, and make a judgment call yourself if you believe this is ripoff. I certainly believe the lender fees, there's an argument, but there's no other aspect of reverse mortgage that I believe can legitimately be called a ripoff, as I've just outlined. Now, if you are interested in a reverse mortgage, I'll give you a free professional reverse mortgage assessment in 90 seconds. I'll advise you if it's a good solution for you, if something better works, find you the lender of the best deal, show you all the hidden fees, the hidden costs, the interest rates, and everything you need to know, comparing all the lenders to make sure that this is the right option for you and that you're getting the best deal with the best lender. All it takes is 90 seconds. You can click the link in the video notes or go to ReverseMortgagePros.ca/assessment. That's ReverseMortgagePros.ca/assessment. If you've got any questions or comments or everything, I answer every single YouTube comment personally. Just leave them below and I'll get back to you within a day or two. Otherwise, I hope you found this information useful. I hope it helped answer the question yourself and it gave you a different perspective and something to think about when it comes to reverse mortgages. Thanks.